Hi, I'm Jimmy. In this video, we're going to be looking at value stocks that are going to make up our value portfolio from our Dow 30 analysis. So if you're new to this channel, well, what we've been doing is we've been doing an analysis we call the Dow 30 analysis, where we analyze all 30 companies in the Dow Jones Industrial Average. We then take that analysis and we're building three different portfolios: a value portfolio, a growth portfolio, and a dividend portfolio. We already completed the dividend portfolio. This is the value portfolio. Then after this, the final piece to the puzzle is the growth portfolio. So my goal here is to pick reasonably priced stocks that could do great for long-term holders. Now, because this is part of the Dow 30 analysis, we're only picking companies, or mostly picking companies, that are part of the Dow Jones Industrial Average. We limited ourselves to those 30 companies because I wanted people to be able to see the research behind each of the stocks that we put in the portfolio. Now, I do have some add-ons that I think could be a good addition to this value portfolio that are not part of the Dow, but I did limit myself to only analyzing value stocks that we've previously made videos on. So this video is going to be less about reviewing the individual companies and more about reviewing the stock selection process for building a value portfolio. So our first sector is the industrial sector. We have three different value stocks coming out of the industrial sector. First one is 3M. Now, 3M makes a ton of different products. They make tape, they make Post-it notes, they have security gear, they have air filters, they have bandages, and the list goes on and on. Now, this is their chart over the past 5 years. And as we could see, they had a pretty big drop in their stock price at the end of April and in early May. This drop was from a miss in earnings. And management came out and they also lowered guidance going out the next couple of years. Now, personally, I think that this sell-off was a bit of an overreaction by the market, which is okay because this gives us our value opportunity. Okay, now we shift over to our next value stock, Boeing. Now, this one's interesting. They've had a really crazy couple of years. So I'm sure we all know that they had a few terrible plane crashes, and that has really hurt the stock's ability to keep climbing higher. They had some inventory issues for a while, and as we could see with this stock chart, they haven't done much in the past year and a half or so. They've also been caught in the middle of the whole trade war situation. We could actually say the same thing for 3M. But this is actually, it serves our purpose well, because since we're building a value portfolio, I'm assuming the trade war situation is a temporary situation, and I would expect both Boeing and 3M to do well in the long run. Okay, our last industrial company is United Technologies. Now, United Technologies is super interesting because they just recently announced that they're going to be merging with Raytheon. Now, this is an all-stock merger, and United Technologies is the bigger of the two companies, but Raytheon isn't that small. It's got about a $50 billion market cap. So in the long run, I think that this merger will do well for both companies. And at the end of the day, I think that they will do better together than they were apart. I think the economies of scale that they pick up from this merger will ultimately be a good thing for the stock. And in the long run, I think that this will be a great addition to a value portfolio. Okay, back to our value stock portfolio. So up next, we have the financial sector. In the financial sector, we have two really good companies, Goldman Sachs and JP Morgan. Now, I like both of these companies for very similar reasons. First, Goldman Sachs, well, they are one of the biggest and most stable investment banks in the world. Then JP Morgan Chase, they're one of the largest and most stable banks in the world. Now, I think that it's going to work to their advantage in the long run. The financial sector has been going through a lot of different changes recently, and ultimately, it seems that the larger companies are expected to do better as they continue to consolidate and continue to make accretive acquisitions that could ultimately help all of the top dogs in the industry. Now, I think that these two companies in particular are going to do the best in, let's say, the next 3 or 4 years. Okay, now we jump over to the healthcare sector where we have two companies, Johnson & Johnson and Pfizer. Now, these two companies are great defensive names, and I think they make a good addition to value portfolios. But on the negative side, well, take Johnson & Johnson as an example. They've seen a ton of well-deserved criticism lately, and if that alone kept them out of the portfolio, I completely understand. So even though the stock has really not done much over the past 2 years or so, revenues and profits have continued to climb, and I would expect for eventually the stock is going to catch on to how well profits are doing. Now, if we switch over to Pfizer, well, there we can see that Pfizer's profits have continued to climb nicely, despite the fact that the pharmaceutical industry has faced a bunch of headwinds, and I also expect their stock to continue to move higher over the next couple of years. Okay, next up we have the energy sector. In the energy sector, we have two companies, Chevron and Exxon. Now, out of these two companies, my favorite company is Chevron. Although I also like Exxon, I'm just a bigger fan of Chevron's long-term stability. Now, both of these companies are heavily reliant on the price of oil. This is what crude oil has done over the past couple of years. Now, this particular chart is WTI oil, which is oil that comes out of West Texas. But something like Brent oil, which comes out of Europe, well, that price chart looks very similar to this one. So oil hasn't done all that much. It's been somewhat volatile, but it hasn't done all that much since the collapse in 2014. But Exxon and Chevron have both done a good job of growing profits, and I expect for this to continue over the long run, which is why they would end up in a value portfolio like this. Okay, now we jump over to information technology. Here we have both Apple and Intel. Now, considering both of their size, scale, and general reliability, well, it seems that they are trading at a pretty good value right now, because right now Apple stock is trading at a PE of about 17x, and Intel is trading at about 12x. Meanwhile, the S&P 500 is trading at an average of about 20x. So over the past few years, Apple has seen a decent amount of volatility, but Apple stock, as we can see, hasn't done all that much in those 2 years. Now, when we look over at Intel, well, Intel, they had a big dip here on fears of growth and trade tensions. Well, from a value stock perspective, both of these, well, this type of activity, I think, makes it better and more interesting when building a value portfolio. They continue to grow profits, but the stock just sort of stalls out for a bit. Now, this brings us to our last sector and our last company for that matter, and that company is Walgreens. Now, I'm actually a fan of Walgreens from a value stock perspective, and as we can see in this stock chart here, well, a lot of these dips were caused by overall industry pressures. And I actually think that given the industry pressures, Walgreens has done a pretty good job of positioning themselves in the face of drug prices and retail pressure in general. Walgreens has gone out, they've acquired a piece of Rite Aid, and they've done a lot to try to offset what has been happening to the general industry. Now, this actually leads us to some potential add-ons that I think could make this whole portfolio a little bit better. One easy one is to add CVS right alongside Walgreens. Now, I actually think that CVS is a bit more of a defensive play than Walgreens is, because CVS acquired Aetna, where Walgreens went ahead and they acquired Rite Aid. So I think pairing those two together, CVS is not in the Dow. That's why I'm sort of making an add-on here. Another good addition to this whole portfolio would be over in the industrial sector, and that is to add General Electric to it. Now, you might have seen the GE video I just recently did. If not, once again, link in the description below. But this would be more of a speculative holding. I think that this has the potential to have an enormous upside over the next few years, but there's also some risk involved in that. So that only makes sense in our portfolio if we're willing to take a little additional risk. Now, another addition to this whole portfolio that we could easily make the argument is the most important addition we could make would be to add an ETF to this whole mix. Because personally, I found that building a value portfolio when the stock market is up at all-time highs is somewhat of a tricky thing to do. Some of these we had to stretch, our accepted term of value. This is much easier to do when the market crashes. And I'm not quite sure these total 14 companies, assume we bought all of them, is enough diversification. So if we would add an ETF like VOO, which is an S&P 500 ETF put out by Vanguard, they have a fee of about 3 basis points, and that would add the entire S&P 500 to this portfolio. So in the long run, I think that's a very smart thing to do if we're trying to get enough diversification on top of a solid value base. So I believe that for the long-term buy and hold value investor, This is a very solid portfolio. I think this would do quite well. Another thing we could do, they're not stocks, so I didn't include them in the core, would be to add some corporate bonds. Corporate bonds add a certain amount of safety, and they tend to do well when the market struggles. But my question is to you, are there any value stocks that are not included in this that you would have included? If you do know some that aren't in the Dow, or even if they are in the Dow, please let me know. Perhaps I can go ahead and try to make a video on those companies. So if you happen to know any, even if they're from companies outside the United States, please let me know in the comments below. I'm sure the community would appreciate it, because diversifying this type of portfolio with some international holdings would be a great twist to this whole thing. So thank you for sticking with me all the way to the end of the video. If you haven't done so yet, please hit the subscribe button, hit the thumbs up. Thank you, and I'll see you in the next video.